Yo, 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 yo. What's going on, everybody? What's going on, everybody? What's this? What's that? Who puts does Father Legend and drop the whole dissertation in the chat? Father Legend, what you running your mouth about in the chat? Lord have mercy. I don't know if I just got this squanched up. I got this squanched up. I know I got it squanched up, but cheese and rice. I tell you, back to life. Cute soul to soul. Back to life. Went on tip. Asian like crazy. Was down. Oh, man. I don't need to count messing with these EQ minutes. Long story. Less long. Scared down the microphone again. Rode his journey. Digging out hole. Kept my head down so long. Green there. Quit while you're ahead. Stay in the session that you've proven to work best for you, your strategy, and for goodness sake, leave. Leave them little funky minutes alone. Leave them alone, them little funky minutes. Leave them little funky minnows alone. They'll do your ear. They'll do your ear. Boy, I tell you why. What? Charles dug down to the crack of his rectum and dug that when I leave them funky minnows alone. That boy said it with his chest. That boy meant that. You feel me? Oh, man. I ain't sent the bat. I thought I sent the bat signal lot, but I did. I see I ain't sent the bat signal lot. I just sent the bat signal lot inside the Discord. So while I'm waiting on people to pull up in the Discord, if anybody want to pull up in. Speaking of the Discord, let me jump over here real quick. We had a few new members join the gang. Shout out Dunn. Dunn pulled up. Let me see if anybody new. It don't look like it. Don't look like anybody new pulled up. No. Oh, here it is right here. See if anybody new pulled up. Nope. Nobody new pulled up today, but we had a few new members that pulled up. So, with those new members, if you go to the membership tab, right? I saw it with some new members. Like now, for some reason, everybody that joined the gang, like the channel memberships, everybody that joined, they don't always come into the Discord. Or maybe they just ain't Discord people. But man, I've been like binge watching these videos when they be talking to the people and so they done killed somebody and they be in there with these two detectives right here. It ain't just them two, but they be in there with some detectives. I was watching the part 1 to this like today and yesterday. Man, them things be so entertaining to me. But if you go to your channel, right? The people that join, they click that join button, right? If you see on my videos, it'll say join. If you come to my page, it'll say join, like right over here. Let me turn my fancy, follow the bouncing ball. If you hit join, you can join on any video. There's a join button below the video. If you join the membership, you're not automatically put into the Discord, right? The membership is YouTube, right? You have to go in and accept the request to get into the Discord. And when you go, I put a new, it's at the top now, right? It's at the top right now, right? So if you come in here, if you click on read more, if you can't see the link, there's a link in there to join the Discord. All right, I'm not going to show it because it'll show the whole link, and then people could, like somebody that's not paying for the YouTube membership, can just type that in and get into the Discord, right? But when you go in, when you accept the link, you're just going to be verified. I mean, you're just going to be in the only thing you're going to be able to see is the welcome channel. Read this, and then go to the bottom and click on this little muscle emoji. Right now it says 80. Make it go up. 80. The next person that click it, 81. Person after that, 82. Right? And once you do that, if your YouTube name, whatever channel that you're using to watch YouTube, whatever channel you use to join the YouTube membership, if that name is not the same as your Discord name, right? Once you hit that once you hit this, then you will be put into the member section, and then I would have to put you into your right tier, like Dawn signed up for the mentee tier, right? The mentorship tier. So now I put her in the mentees, right? If you sign up for the gold, I'll put you in the gold. If you sign up for Black Spot, I put you in. I have to put you in your right tier because it's not automatically connected to YouTube, right? This Discord is just my appreciation to the people that supports the channel through the YouTube memberships and give them more access to me to ask questions, to one-on-one with me. You know what I'm saying? Like, because I know when you're looking at a pre-recorded video, or if you be on live, you may not have a question right then, or you may be embarrassed to ask the question. And being inside the Discord, that gives you more time to interact with me. Say, hey, Tim, I got a question today. That's what this is for. And then we have a regimen of regularly scheduled Q&As that we do. But that's just to show you how to get in. A few new people signed up. Only one of them came into the Discord. I've done my part. I've done my due diligence. So now, with that out of the way, get out of the way. Good evening. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning into Tim's Tidbits, I still want to say welcome, but give you a nice hearty well, thank you for always tuning into Tim's Tidbits. If by some slither of my imagination you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande, Big Spider if you don't hablo Espanol, and you are now in tune to another episode of the Intra-Day Price Action Recap. What's going on, y'all? Who in the chat, man? Who in here? We got Here to Learn and Share up in here. We got Father Legends up in here. You done dug yourself out that whole Father Legends. We got Tish up in here. We got Deborah up in here. We got E-Rock up in here. We got Kim up in here. We got, what's up, sweet lady? Would you be mine? Shout out my nephew Charmaine. Shout out my nephew Tremaine Trades. Hey, if y'all, hey, the cat out the bag. Now, everybody in the gang been finding me. So if you want a good community to be a part of besides the gang, go check out Tremaine Trades. A very talented young man that he runs a Discord community, right? He got a Discord community. If you go to the tube, if you go on the tube at Tremaine Trades, it's not Tremaine like you think of Tremaine with a T. It's Tremaine, Chermain. Tremaine Trades right here. That's him right there. You see the one over there rubbing the Birdman hands? You see how he got the Birdman hands right there on this thing right there? That's him, right? Famous guy, like 10,000 followers, millions of views on his videos. But real talk, got a real nice community. You know what I'm saying? Real nice community. I used to hide out in there, but like several people of the gang done found me. You know what I'm saying? But TainTrade, shout out Tremaine. Y'all know I like to shout out people that's doing good things in the community. So go check him out. He got a little WAP thing right here. Let me copy this right here. Let me copy this here. WAP. All right. I put his link in the chat right there. That's his WAP link in the chat. I'll pin it to the top of the chat. Right? If anybody want to go check him out, want to go check out what he got going on, want to join his Discord. He got a mentorship he getting ready to launch too, like a mentorship. He getting ready to launch that. I got lifetime access to his Discord. He got some other stuff. He got some other stuff in there. Go check him out. Right now, let's get to it, man. Let's get to this price action recap. I ain't gonna be before y'all long today. I know I always say that and I end up running my mouth forever, but I ain't gonna be before y'all long today. Today, it was what I would call a high resistance liquidity run trend day to the upside. That's what today was. Today was a high resistance liquidity run trend day to the upside. Well, Tim, what do you mean by that? Right? These are 1 minute candles right here, right? And we just gonna focus on like the New York session, right? So this right here is 9:30. We're gonna put, if I can get there, close enough for government work, right? That's the 9:30 open right there, right? And from the 9:30 open up until the close, right? From the 9:30 open up until the close, you can see that price was in at, I know it's all squanched up. Tim, I can't see the candles. I can't see the candles. It's all squanched up, but you see we was in a high resistance liquidity run all day, right? What do we talk about? Yeah, class participation time. What's up, FC? FC, if y'all don't know who I be talking about, right? When I say that people found me, first it was Deborah. Deborah found me first and she blamed it on the algorithm. Then it was FC. I said, bye, Felicia. Get out of here. What you doing here? Right? But it's what class participation time. Somebody that's in the Discord, pop in, lump. You in the Discord, it's on you, right? What did we say about the high resistance liquidity run days? What is a key indication to that? What do we say we'll have? We'll have deep what and overlapping what? What did we talk about yesterday?
I can't remember. I don't know the answer to that.
Oh, you can't remember.
Yeah, we got deep what? Deep. What was the other part?
On a deep, we have deep something, and we got overlapping. What? Like overlapping what? I appreciate you, Tremaine. Appreciate you.
We got deep pullbacks.
Deep pullbacks. There you go. There you go.
Overlapping. Then probably order blocks or something.
No, what? They red and green. Give you some help. They red and green.
Candles.
Yes. So on high resistance liquidity run days, you have deep pullbacks that don't sweep both sides of liquidity. And you have a bunch of overlapping candles, right? Okay. Seek and destroy days, we take buy side, take sell side.
Direct, right? You're still going up, right?
You're still going in a particular direction, but you're not taking both sides of the market. So we taking buy side, go real deep, go take buy side, go real deep, take buy side, go real deep, buy side. We slowly going up, but we got deep pullbacks and a lot of overlapping candles. The candles just like it sometimes it's consolidating and sometimes it's not, but they just overlapping each other a whole lot. You know what I'm saying? They taking out the highs and lows of the candles, but we ain't really taking out the highs, then taking the lows. On seek and destroy days, we taking the highs, taking the lows. You know what I'm saying? Set a new high, set a new low. Set a new high, set a new. That's seek and destroy. And then high resistance, we got them deep retracements and them big overlapping ranges. So see, we had a high. That's why I said it was a high resistance liquidity run trend day to the upside. Because all we did was trend to the upside, but it was high resistance because we was having deep retracements, right? So since it's just a trend day, ain't a whole lot to talk about. We gonna focus on something that we don't talk about a lot, right? Yeah, that's We gonna focus on who remember this, right? We ain't talked about this guy right here in a while, right? I used this today to make a trade, right? I used this. Hey, Tremaine, be quiet in the. I got my ruler. Be quiet in the back of class. I got my ruler and I got. Hold on. Wait a minute. Come here. Where you at? I got my ruler and I got my back scratcher. Come, be quiet in the back of class. Hey, who remember this right here? Right? Who remember this? Do y'all remember what this is? We ain't talked about this guy in a long time. Right? Who remember this guy right here? Lump, you remember that guy right there? You remember that guy right there, Lump?
What it say? That's he called that the
Is
that
Lump
first,
echoing, y'all? Is Lump echoing? Let me put my headphones on.
first presentation.
No, not first presentation. Read, man. What does that say? Go Stranahan.
Implied bullish fair value gap on the 5 minutes.
Yes, implied bullish fair value gap. I used this today to take a trade this afternoon. Right? I used to take a trade this afternoon. Who somebody jump in the Discord. Deborah, are you working? Deborah, jump in the E-Rock. Jump in the Discord. Somebody jump in the Discord and help Lump out. I know Lump, since you've been like really tapped in doing the homework, we ain't really talked about this one. We covered it, but we ain't talk about it a lot. Somebody jump in the Discord and help Lump out. Who know what this is? Right? Who knows what this is?
What is an implied fair value gap?
That's why I'm asking if they know what it is before I tell it.
Oh, that may be
I know Throwback Gang remember this. Deborah, I know you know.
Oh, that's the one.
E-Rock, I know you know. E-Rock.
I know you know.
Yeah, you can't hear me?
Yeah, I hear you.
E-Rock. Okay, I see.
Oh, hold on.
Okay.
Okay, I got to turn off the volume on thing. Okay, can you hear me now?
Yeah, I hear you. I heard you before.
Oh, okay. It's an implied fair value gap. Is that what you're talking about?
Yes, the implied fair value gap. And what is that?
I wasn't really paying attention. I heard you yelling my name. So the implied fair value gap is when you take the consequent encroachment of two overlapping wicks.
Yes.
Right?
Yes. Okay. Look at E-Rock coming through with the hard hitting question. Look at E-Rock coming through with the hard hitting question. So, for those who don't know what an implied fair value gap is, right? You see how on this 225 candle right there, right? We get this move up, right? And we went above this candle's wick there, right? And like blasting off with maybe the potential, like it want to create a fair value gap because it's such an aggressive move. But to the left of it, we got a long wick, and to the right of it, we got a long wick, and those wicks overlap. Michael has a PD array that he calls an implied fair value gap, where you put a fib from the body of the left candle to the wick, and then a fib from the body to the tip of the wick on the right, and the consequent encroachment between those two wicks, that's the implied fair value gap. And that's one of his PD arrays. So if you're looking for an entry, right? You're looking for an entry, and you see here, right? We got a immediate rebalance trading back into a fair value gap right here at this consolidation, right? So what made me want to look for this as a possible entry to go long? All right, let's talk. Let's break it down. Right, what's the most important thing about ICT concepts? Right, what's the most? That's question.
The
Oh
narrative.
my god! Oh my god!
Time and price.
My brother. Why my brother embarrassing me on the internet? We got company in here tonight. We got company in here tonight, man. Look at they looking at my neck. They looking at my neck. So, time is the most important part of the ICT concepts, right? So, when do we expect price to really move? Right? When do we expect price to really move? What time are we looking for price to really move? Like, well, what times? When is that? The macros. The macros is when we're expecting price to spool. Right? Very good, Deborah. Look, Deborah pulling up with the answers. The macros are when we expecting price to spool, right? So, with this in my mind, right, we got us here, right? What is this right here? What is that called right there? That's a question. Right? What is this right here called?
Consolidation.
Consolidation. Right? We got consolidation. Then what is this right here?
Displacement.
What's the E word?
Expansion.
Consolidation, expansion.
Yeah.
Right? So, right, price has been, right, in an uptrend all day. We done had us a high resistance trend day to the upside, right? So since we got a trend day to the upside, right? What is this? Can you see what the name of this line is right here?
Hold on, let me stretch my screen.
Hold on, let me make it big.
That's the high from the previous day.
Okay, what is a previous day high is a what?
That's anticipatory point.
That's an anticipatory reactionary point, right?
Yeah.
So we are consolidating at an anticipatory reactionary point, right? So this is the point where we're waiting for price to tell us what it want to do, because this is a daily ARP, right? Once we consolidate there, we expand to the upside. So if we see consolidation and then we see expansion to the upside on a trend day to the upside, what are we anticipating? Are we anticipating curved or are we anticipating curved?
1R.
1R. Very good. We anticipating curved, right? So if we anticipating curved, this is our consolidation. This is our expansion. What's up, son? How was school? That's what's up. You came home with Timothy or your mama?
I came home, bro.
Okay, what Timothy? Still at the school?
Tiffy still at school.
Okay.
Oh, my bad. I didn't mean to interrupt. I was just saying.
Oh no, you good, son. Yeah, so if we got our consolidation, we got our expansion. Now what we expecting?
Reverse.
No.
I mean retracement.
Retrace and deliver, right?
Yeah.
So we got our consolidation, we got our expansion. Now we're looking for a retrace and a deliver. Now we know what we're looking for. We said if price does this, then it should do that, right? When do we want to see it? When do we want to engage? We want to engage at a certain time, right? So price does this, right? It consolidates, it expands. Now we're looking for a reason to enter, but we want to enter when? During a time when we expect price to do something, right? When do we want to enter? When we want time to consolidate or when we want price to spool? When do we want to get in? You want to get in consolidation or when we expect it to spool?
When we expecting the spool?
We want to get in when we expect it to spool. When do we expect it to spool? During the macro time, right? So heading in right before the macro, we consolidate, we expand, right? And now we're starting to retrace and we're coming into a macro time, right? Yeah. So now as we're coming into the macro time, now we want to have our areas when we drop to our entry time frame. We want to have our PD arrays that we're looking. We want to have our APRs from the 15 or the 5, right? From the 15. Yeah, I mean, yeah, ARPs. We want to find our ARPs. Thanks for the correction. We want to find our ARPs on the 15 or the 5. So when we drop down to the 1, we know, okay, this is where I should be looking to buy or sell, right? So 15 minute, we ain't got nothing, right? And then to the novice who ain't up on game for the implied fair value gaps, right? Now they don't see there's an implied fair value gap right here. So this is the only thing we got there that we, you know what I'm saying, we could be looking to buy off of. What, Tim? Why you say that's the only thing? Because, right, we had a fair value gap here. We blast off, right? And when this wick down and overlap that high of this candle there, we're looking at this right here to be what? Right? What do we want that to be? That dip down, covering back up that wick. What are we looking for that to be? That's question.
I don't know.
Start with an I.
That's the implied right there.
Nuh-uh. Here to learn to share. Very good. Here to learn to share. Immediate rebalance. Okay. Right? We're looking. We want this to be an immediate rebalance. How do we know if that's an immediate rebalance? What lets us know that that's an immediate rebalance?
It took out the candle before it. It took out the whole candle.
Nuh-uh. It's got to do with these candles over here. When we see this dip down into there, we anticipating this be immediate. And what do we want to see to let us know, yes, that's an immediate rebalance? What do we want to see with that candle at the most, that candle right there? We want to see it do what?
I'm not sure.
Gig it gone.
Go Kenya.
Yeah, we want to see it gig it gone. We don't want to see it hanging around there, right? If we bullish and this candle come up and close with enough distance to make a fair value gap, and then we trade down in there like that without making a fair value gap, on that next candle at the latest 2 candles over, we want to see price gig it gone. And then we say, okay, that was an immediate rebalance. Now, with all of that knowledge, we got our consolidation, right? We got our consolidation. We got our expansion. We see that there was an immediate rebalance. Now, with all of that, right, with the immediate rebalance, right, what is price telling us about this area down here, right?
That's a balanced price range.
It's a balanced price range, and price is done with it. Price do not want to go back down there, right? Immediate rebalance. It's in a hurry to get away from there, right? So we're not looking down here for an entry, right? So we mark out our 5-minute implied fair value gap, right? Mark out our 5-minute implied fair value gap, and then we will. I'm gonna put a line right here for the start of the macro, so we'll know when we go, because we going looking for our entry when the macro start, right? So boom, get it at the macro time, right? We come down here to and during our macro time, okay? And then when we get into our macro time, we come down, we trade in here and move this out of the way, right? We go up there, we come back down, we trading down, and now here's our macro time right here, right? So during our macro time, we're still doing this high resistance thing, right? We're doing this high resistance thing, and what are the bodies of the candles respecting right here? What are the bodies of the candles respecting during this
encroachment on your implied fair value gap?
The bodies of the candles are respecting consequent encroachment of the fair value gap. Now, what do we say about the macro times, right? When you split them down the middle, right? If the beginning of the macro is coming down and attacking this sell side and we're bullish, right? We're looking for the second half of the macro to do what?
To respect that and go the other way, or
yes, attack the buy side, go the other way. That's what the first half of the macro came down, taking the sell side, but whole time respecting the consequent encroachment of the implied fair value gap, right? And then so on the second half of the macro, we're looking for it to attack the buy side. Okay, so since we're looking for it to attack the buy side, now what do we want to see for us to say, okay, it's a go. We want some type of what?
Imbalance. Or PDub. What's that? What's that? CI? Change in the state of delivery?
Yes, we want to see some type of change in the state of delivery, right? And let's get some different name some different types of what's the main change in state of delivery that we look for?
Fair value gaps. What's that? Order blocks?
Order blocks. That's the main one. That's the main change in state of delivery we're looking for. All right. What's another one that we can get?
Inverted fair value gaps.
Inversion fair value gaps. We can get those. What's another type we can get?
Breaking market structures.
Breaking market structures, right? These are all the different kinds of change in the state of delivery that, all of these represent a type of change in the state of delivery. But the main change in the state of delivery that you want to look for is creating that order block, right? Creating that order block. Okay, so now when we come over here, right, you see over here, and you see we done had us a high resistance day, right? So look at these candles. See all this overlap? See, look at that. All this back and forth, like this down close candle, then this up close candle about the same size. Then we trade all the way down, but all these candles like overlapping each other, overlapping each other, overlapping each other. Then when we come down here to the low of the implied fair value gap, right? Then we trade back up, right? And this candle right there, right? That's got the lowest down close in this move down right there. So when we trade back above that price right there, that's our change in the state of delivery right there, right? And that's the price that I'm buying right here. I'm buying that price right there, right? But if you don't want to trade that, right? You had an opportunity to trade a volume imbalance here, right? That breakaway gap right there, right? If you want a little bit more, right? There's your breaking market structure right there, because that high is the high that took out the low. When we traded above that high, that's your breaking market structure right there. It didn't come back to the fair value gap, but it did come back to the volume imbalance. And if you traded the fair value gap properly, right, then you would have had it marked out like this, because it's got a volume imbalance on the top and the bottom, right? And so it did come back into the fair value gap, right? But if you didn't mark it properly, you wouldn't have got picked up there, right? But you would have got picked up if you trade the volume imbalance. So that's one opportunity to get in there off a fair value gap or a volume imbalance, or did it touch the breaker? Yes, we did touch the breaker, right? Because we come over here, right? That candle right there touched the breaker, right? So that traded into your breaker. So that's a breaker entry. And then if all of that right there was still not enough and you wanted a real confirmation, right? There's another breaking structure there, right? There's another breaking structure there. And
what type of order? You said that's a breaking. So what kind of order block is that? Is that an order block right there that you just marked? What you marked out right there?
That's the breaking market structure.
Okay.
Yes, that's because we came up this high, came down and took out that low, right? So this high took out that low, and then we traded back above that high right there. So that give us a high, low, high. That's your breaker, right? This will be a breaker right here, right? But that's your breaking market structure, and then we traded back to a fair value gap right there. So you got a fair value gap entry there off the breaking market structure. You got a fair value gap or a volume imbalance or a breaker entry there, and then you got an order block entry there, is what I was looking at right there, all off of the implied of the fair value gaps. Man, this was good, man. This was a refresher. It was a refresher, but I think it was good.
You ain't say this stuff really works.
Oh yeah, man, this stuff really works, man. Hold on. I got to get it right. Hold on. Put the stuff back on here. Let me put all my, put my stuff back on there. And that's that entry. Oh my goodness. This stuff really works. Hey man, do anybody got anything for me? Anybody? I think this was good. Anybody got anything for me? Y'all got anything?
Them candles definitely respecting that implied fair value gap when it came back to it.
Hey man, but it ain't no such thing as no algorithm. They say it ain't no such thing as an algorithm, man. They say it's all buying and selling pressure. That's what the word
Listen,
is
man,
on algorithm.
the more we tune in, the more we see them fair value gaps doing what y'all saying they supposed to do.
Yeah, man. And this afternoon, we did have a high resistance day, but this afternoon was a little bit cleaner than the morning, in my opinion. Right? It was a little bit cleaner than the morning, in my opinion. Right? Because this is this morning's price action. Right? See how we're going up, but there's a lot of overlapping. Right? And then once we came into like 12:30 in the lunchtime, right? See how price moved a little more, consolidated, moved more. Right? This afternoon was a little bit cleaner in my opinion. I don't trade the lunchtime. Right, I started watching it from like 1:30. I watch it from like 1:30 up until like 3:30. Right, that's the time when I'll watch it. Right, and when I saw this consolidation, I said, okay, we consolidating at the high. We had a nice clean move during lunch. I don't think we're reversing because we've been in a trend day. I'm not going to try to call the top. We're right here at this daily high. Right, I'm not trying to call the top. I'm submitting to the trend. The higher time frame narrative is bullish also. You know what I'm saying? So what am I looking for the rest of the week? Tomorrow we had a large range day today, so I'm anticipating a nothing day tomorrow. Right, I'm anticipating a nothing day tomorrow because why? Because we had what do we have today? Right, we had an everything day. So I'm anticipating a nothing. We have everything and nothing, right? Could we have a something day tomorrow? Yes, we can, right? Tomorrow we got GDP in the morning, right? So GDP may be the catalyst to give us that something. You know what I'm saying? It may be the catalyst to give us that something, right? But we had a large range day today. So, I'm just going to tailor my expectations until I see what the price want to do after GDP tomorrow morning, because we had such a large range day today. Then we got what they call it? Not NFP. What you call it? God dog, I can't think of PCE. Yeah, is it PCE? Yeah, personal income outliers. I think that's yes, PCE. That's it. Right, we got PCE Thursday, and we got NFP Friday. Right, I'm having a brain fart. So all of this right here is high impact new stuff. Y'all know on NFP, right? Y'all know on NFP week after Wednesday, right? On NFP week, the cleaner price action usually be like on like Monday, sometime Monday, Tuesday, and Wednesday, right? That's be the cleanest price action during NFP week, right? And then, but Monday was very manipulated, high resistance. Today, the morning was high resistance. And remember when we looked at price last week, when we looked at the whole week on the weekend review, right? Just looking at the whole week, let's blot all this stuff out, and then we're gonna wrap it up. Right, so we'll look at let's look at the week thus far. Oh, I need that new week opening gap. All right, that's the beginning of the week. Okay, so this is the week thus far. Right, this is the week thus far. Now, okay, this is what you want to pay attention to. Right, this is how I like to start building my expectations. Right, so far this week we've had consolidation. Right, we've dipped below and we've gone up. Right, now this can be one of two things. Right, this can be either, right, this can be my favorite signature, right? And if this is my favorite signature, what part of the move are we in right now? Class participation time. If this is my favorite signature here, what part of the move will we be in right now?
Okay, I see consolidation, expansion, and then you're gonna retrace right there.
But I'm saying, if this is my favorite signature, y'all know my favorite signature is the wig snatcher, right? The wig snatcher.
Oh, yeah.
So manipulation. There you go, Deborah. If this is the wig snatcher, we're in the manipulation phase of the week right now. You see what I'm saying? If this is the wig snatcher, right? So it's three scenarios we got to play out in our mind, right? I'm holding up both hands, so if you're right-handed or left-handed, right? So scenario one, we in the wig snatcher, the WS. So if this is the wig snatcher, right, we'll be looking for the cur word, right? We'll be looking for the cur word, right? Consolidation, expansion, reversal, right? Retracement, right? I mean, let me see. Consolidation, expansion, reversal, retracement, and deliver, right? That's what we'll be looking for. If we, it's like we went consolidation, expansion, reversal, retracement, deliver, right? So if we are, if this is the consolidation, expansion, right, then we could come here, reversal, retrace, and deliver, right? If that's the, what's the name? If that's the expansion, then the reversal part of it. But since price has been bullish, right, we're anticipating this to be the consolidation, expansion, reversal, right, then the retrace and the deliver. Since price is bullish, right, because this is when we have manipulated people, right? So we took them down and then we came and ripped them out, right? Took them out, snatched their wig. So we, you know what I'm saying, people have been manipulated, right? So now we're looking for the retracement and the deliver. Okay? Now, what nullifies that as being this right here? If we displace below that low, right? If we displace below that low during GDP or some other news factor, if we displace below this low right here, then we can say, okay, this was our consolidation, our expansion, our reversal, and then we'll be looking for a retracement and a deliver, right? And we could be targeting something like those lows right there. Okay? Now, that's if, you know what I'm saying, price for some reason went all the way down and took out that low. But this is always the stuff you want to keep in your mind when you're looking at the weekly chart and you want to play out these factors. Now, what other factors have played out for us with what we know about weekly charts, right? We got Monday and we got Tuesday, right? What did we do on this Tuesday? We made a low, right, on Tuesday and displaced away, right? So that's another reason why I say we got consolidation, right? And we go in there, right? That's why another reason why I say this is my favorite little signature there. Why? Because we was coming here, and we started breaking down and got down here below the lows. What do? We put people into the trade, right? Tricking them in to go in the right direction, immediately reversed, took them out, and then put people in short, and then immediately reversed and took them out. Right? So now, you know what I'm saying, the wig snatcher. We got the wig snatcher, right? And now we're looking for the retracement. Okay, so we got a Tuesday low of week. As soon as we make that low of week, we displaced away, right? So now we're looking for the retracement to deliver up for a bullish week, and then ending, you know what I'm saying, here, retrace, and then end somewhere off the highs, right? And that will give us a power of 3 week, right? Right? Power 3, right there, right? That's our accumulation, manipulation, and then distribution above the highs close at or near the high, right? So that's what, and then what will void that sentiment is if we displace below that low there. If we use the news to come all the way back down and displace below that low there, right, then we will look for the new week opening gap to act as resistance, and then you could be targeting, right, these lows down here, right there. You could be targeting those lows there. Okay, got it good. All hearts and mind clear. That's it. Don, E-Rock, Lump, y'all got anything? Since y'all
got it.
Tim, can you repeat what you were just saying again about I'm trying to take notes when you're going through the weekly profile.
You know we got replay, right? Now, what you were saying? Which part of it? Which part of Ocean playing? Ocean messing with you?
No, you're right. No,
which part of it?
I can. No, I'm gonna do the replay anyway. That way I can take my time and take the notes and stuff.
No, I'm saying
I think I get it, but
I got all night. Which part of it? All
okay,
right.
so I guess yesterday we consolidated,
Mm-hmm.
and then we consolidated and we came down.
Let me
and then
put my days on
so
there.
wait,
So
hold
I
on.
can,
Let me pull this up.
put my days on there so I can see the days at the bottom. Days a week. Okay. All right. So Monday and then Tuesday. Okay.
Yeah. So Monday we consolidated through Asian and London, and then we expanded down in New York, right? Or are we saying that we just Monday, a whole day Monday was consolidation?
But yeah, we can look at just that. If you're looking at the week, we just looking at the days. So we just Monday was just
by day.
That's a consolidation day because we opened here, we traded there, we dropped down near the open, and then the New York time frame we closed like right around the we closed like right around here somewhere, and then just finished out the day. So we pretty much just just a consolidation day, right? So that's Monday, and then all right, now this Tuesday right here. All right, this is Tuesday's price action. Right there, let's go to 445 there. Okay. All right, so this is Tuesday's price action here. Now, what do we, okay. So now we got Monday. All right, let me hide this right here. Right now. All right, so we got Monday here, consolidated. And then Tuesday, right, we traded down below the week open, right? This is our week open here, right? That's our week open. So Monday we consolidated. Where do we consolidate at? We consolidating at or near the open, right? So that's our accumulation, right? And then on Tuesday, right, we traded down below the opening price, right? We ran stops and then displaced away. Right, so
that was the manipulation today.
Yes. So we got some manipulation move here where we consolidated, then we traded down below the open, ran stops, and then displaced away, giving us a break in market structure on the weekly, right? Because this was the weekly high up until this point here. Right, so we consolidated, then we dipped below, and then we got a break in market structure on the weekly time frame. That's why I say this right here is looking to be my favorite signature. And then for those who don't know what my favorite signature is, here to learn and share, dubbed it the wig snatcher. Right, we're gonna put it wig snatcher. Right, snatcher. You can see the R. Right, and what that is when price is in some type of consolidation or tight range, and then price will move in the direction of the draw, right, and entice traders to get in on a breakout, then it will immediately reverse and take them out, right, and force traders in that want to break out the opposite way, and then immediately turn around and take them out, right? So we force them in the right way, take them out and punish them, generate more liquidity, then take them out and punish them to go, right? So that's the wig snatcher, right? So we got the wig snatcher, right? And then we get our breaking market structure right there on the entire weekly range. So we took out the sell side, and then we went from external to external on a daily candle.
Right.
Like if you look at this daily candle, Tuesday candles took out Monday's low and high. So we went from external liquidity to external liquidity. And external indicates that there's a possible what? That's a RE
Retracement.
reverse. Possible reverse. External
Reverse.
to external means it's a possible reverse, because we expanded down and we went from external liquidity, and then we passed by all the internal liquidity and came back and took out external liquidity again, right? And then here, once we traded above that, right, we traded back down to that internal liquidity and started to push up. You see what I'm saying? So it's still looking bullish, but what'll negate that is if we take that out. Now, on the thing of like the weekly profiles, 70% of the time per ICT teachings, right? So 70, I think it's 70 or 75% of the time. I'm gonna say 70, right? 70% of the times, the low of the week is made on a Tuesday.
Tuesday, right.
Yeah. So now we got what we can appear to be a Tuesday low, right? And what makes me say that, right? Because we accumulated on Monday, right? We traded down and took out liquidity on Tuesday, and then displaced away, getting a break in market structure, right? So now, right, this can very well be the low of the week, right? That can be the low of the week. And if we continue the week and close anywhere above this right here, right, that'll give us the classic accumulation, manipulation, then distribution. We distribute above old highs, right, pull off from the high and close out, right, and that'll give us a open, low, high, close bar, or a up close candle with a wick on the bottom and a wick on the top. Make
So
sense?
since we had the expansion today, then the next thing would be reversal or retracement.
We're
Which
looking for retracement now.
Retrace.
We're looking
Okay.
for a retrace now, because we already got the expansion, and we identifying
Today
this
was
here. Yes, we're identifying Tuesday as the expansion in reverse. Right. So yeah. Right. So we got
Okay.
we got
And then
accumulation.
you're saying it only negates
expand.
that if we retrace and then take out the low.
Yes, because we come down here and take out this low right there, then we can, okay, so if we come here, right, and take out this low, then we come back and use, just say, the new week opening gap as resistance and trade down, then we can say, okay, this wasn't the manipulation move, this was the manipulation move, right? But we're not gonna know that until we get more information. And right now we've been having high resistance days. You see what I'm saying? We've been having high resistance days, so it's not uber clear right now. And then on top of that, right, the NQ been in this range that we're in, but we're starting to look like we want to break out. You see what I'm saying? It's like we're here and we're starting to look like we want to break out. And if we look, right, and if we look here, right, if we look at this, just this range that we was in there, right, we came here consolidating, we went up, right, we came back down, took out them lows, and now we're going back up, right? That's the same little pattern. You see what I'm saying? We went up above that high, right? Because we was below that high there, right? We went up above that high, dropped down below the low, and now we're back up above that high again. You see what I'm saying? So the higher time frame is still showing bullish. You see what I'm saying? The higher time frame is still giving us bullish. And we talked about the ES already took that high. The Dow already took that high. The NQ, we've been looking for NQ to play six sister, and it's been playing six sister to the T, just like we've been talking about. And this is the next phase of six sister, and we can see if that play out. So with the higher time frame being bullish, right? And then when we look at our lower time frame, and it's still giving us, you know what I'm saying, the same indications, that's why we like, okay, this is what the week is shaping up to be. You see what I'm saying? This is what the week is shaping. But since we got all this high impact news like GDP tomorrow, we have to wait to see what GDP give us. Then we got PCE Thursday. Then we got NFP Friday, and we got earnings going on. And all the earnings so far been good, so they can use the earnings, the good earnings, to say, hey, let's keep pumping it up. Let's keep pumping it up. Or they can say, hey, let's sell this off, give it a little discount so we can come back and get us a good Santa Claus rally. But that's why we just look for our invalidation points. That's the invalidation point for going bullish, right? And now the third thing is, right, if we come take this out, right, we could just be, since it's GDP, PCE, NFP, we could get caught up in a seek and destroy. You see what I'm saying?
Yeah.
So we come here, right? We've gone down. We took out the lows. We take out the highs. Now they can come back and take it and take this low out, right? But then turn around and take that high out. You see what I'm saying? Since we got all this manipulation, right, that we always got to be aware of all three scenarios. Don't get caught up like these people on Algo's internet that want to say, oh my goodness, I was right about where price. Forget being right. I'm not a bull or a bear. I'm a beast. I buy them, I sell them. You see what I'm saying? All I want to do is
problem. I be wanting to be right.
Don't want to be right. I know you want to be right. That's why we tell you, put your trade on and walk away. Put your trade on and walk away. Don't worry about being right.
Yeah, the last 2 weeks been driving me crazy. Like it's hard because it keep overlapping, and then you think like it's gonna go up, and then the retracement's so deep, and then you seem okay. Now it's gonna go back down, and then it turns right back around. So.
And see, I'm glad you're saying that. And that's why, you know how you always hear me saying stacks on stacks, blocks on blocks, right? That's why once you understand the concepts, right, you can pick and choose when you want to engage. Because, like, have you ever been on a live stream with me when I say, okay, this ain't algorithmic, I don't want to do nothing with it? Yes, because the algorithm gonna do specific things. So when you see it not doing those specific things, you know, oh, somebody in there pushing the button. Uncle Jerome pushing the button right now and holding it in this range. And you can decide to say, I'm not gonna participate, because you can't guess when somebody's gonna just push that button and make the algorithm, you know what I'm saying, back off a little bit. You see what I'm saying? But when you truly understand that, then that can give you the confidence to say, okay, the algorithm not running by itself today, I ain't gonna mess with price, right? And then you can also, when you understand the concepts, you know, like on like certain days, you can expect certain things. Like if you have like a it's been consolidating like all night, right? And then you get into the New York AM and you say, okay, it should be giving me a pretty good move because it's been consolidating all night. If it don't give you a good move, you can say, okay, they manipulating this. You see what I'm saying? And then when you come back and, okay, this afternoon should be smooth, right? So when you see it start to expand and move, that's when you start looking for your setup. Don't try to force your setup into consolidation. And if it never gives it to you during that session, then guess what? You say, this session ain't for me. You see what I'm saying? Because imagine these 15-minute candles, right? Excuse me. Right? Look at all of this consolidation, right? That's a whole bunch of nothing, right?
Yeah.
You get a pretty decent drop down there, retrace up, and then as soon as you get into it, it start acting like it want to go, right? This is a good move. That's a good move to get in on there. But if you're trying to hold, right, for down here somewhere, now you caught up in all of this high resistance again.
Problem.
You see what I'm saying? And then you be like, okay, this is a no news Monday. I ain't trying to trade no news Monday. If I traded no news Monday, I'm going to try to trade pre-market before all the real manipulation starts, right? Or you can say I'm just going to leave no news Monday alone, right? And then, okay, this was like a consolidation day. So you say, okay, tomorrow we should have pretty decent moves, right? And if it's not giving it to you in the morning session, then you can say, okay, the afternoon should be cleaner, right? The afternoon should be cleaner. If it don't give it to you in the afternoon, you know what I'm saying? Like on this 15 minute, It just looked like it went up all day, didn't give no kind of entry at all. But the afternoon was a little bit
Right.
cleaner. You know what I'm saying? The afternoon was a little bit cleaner. You got some moves in the afternoon, right? But on the higher time frame, it was just trend day to the upside that really didn't give nothing, right? So somebody who don't look at sub 15 minutes, they probably ain't see nothing to do today. You know what I'm saying? And they still waiting. You know what I'm saying? Just like if we go back to when we looked at last week, right? When we looked at last week we had Monday, Tuesday, and then we got the move on Wednesday, right? We got a down move and we got an up move. Then Thursday we ain't get nothing, and then Friday we got an up move. So we got 2 clean days through the entire week. You see what I'm saying? Two clean price action days through the entire week, right? But if you don't understand how to read the price action, then you'll be like, man, you know what I'm saying? You'll be going crazy. But when you know what you're looking for, you know how not to sit in front of the chart and torture yourself. You know what I'm saying? You go in there.
Yeah.
If it ain't giving you what you want, you get out of there. You see what I'm saying? And then if you come back later and see that it gave you a day like this, you don't get mad about that, because guess what? The price going to give you another chance another day. It might not be tomorrow, but it's going to give you a chance another day, right? And if it don't give you a chance that day, it's going to give you a chance another day. You see what I'm saying? Price going to always give you another opportunity when you know what you're looking for. But if you blow up your account, if you blow all your money, then, you know what I'm saying? You're gonna be out
Right.
here. You're gonna be out here like Father Legends posting in the Discord talks. Man, I'm telling y'all, man. So you good? You clear on that? You got anything else?
Yeah, that was good. Thank you, Tim.
You're welcome. Father Legend says, so on the expansion leg, we are looking at 50% of the range for a reason to go long, correct? No. On the okay, so on the expansion leg, we're looking for a well, if you talk about the expansion leg that you're trying to get in
Right.
on, you're looking for the retracement to your PD array, to your anticipatory reactionary point. Right? So let's go into price today. We just gonna go straight to a 1 minute, right? We're gonna go straight to a 1 minute. Right? Get out of here, blue block. I don't need you no more. Right? So we're looking at, right, let's just use this for example, because this is what matter of fact, we ain't even got to use the one that I used, because we came back to it again over here. Right? We came back to it again over here. Let's use this one. In fact, because I used this one, let's use this one here. Right? Let's use this one here. So, right, here we go. We're going to put it into a bigger time frame. Okay? So we came over here, right? We went up, right? We came down below the lows, right? And we came up, right? So then we had a deep retracement, right? Taking out these lows here, right? And then once we got back above our anticipatory reactionary point right there, once we got back above it, right, we used it as support, and then we took off, right, getting us a break in market structure right there, right? So now you're saying, okay, now that we've broke high, I'm looking for a discount PD array to trade off of, right? So now we got our, right, consolidation, expansion, reversal. The reversal is a type of expansion. So this is the expansion leg. So in this expansion leg, right, we're looking for a discount PD array, right? So there's a fair value gap in the discount for price to trade back into, to enter off of, to go long. Right? So we're looking for a discount PD array on the expansion leg if we're looking to go long, and we're looking for a premium PD array to sell off of if we want to go short inside that expansion leg. Do that answer your question, Father Legend? What's up? The G is silent. I saw you pop up in the Discord. You got something? I said we weren't even gonna be on here long. We've been on here for over an hour.
Okay, Tim, I have a quick question.
I got
So
you.
we took okay, so today was the expansion leg, and like what you just showed here. So like going to 4 o'clock, we took out the how we had a breaking market structure on that 4 o'clock candle. And then we retraced down. And then but that was like a really deep retracement.
Mm-hmm.
So okay, so what messed me up? So we took that high. Well, I guess because we broke market structure.
Okay, wait. This right
When
here is what messed you up.
hold on, I gotta
This
see. Oh
drop, this
yeah.
drop here is what
Okay,
messed you
no,
coming below those
not
lows.
that drop. Not that drop. Once we took the high out, and then it came
Here.
back down, and it had isn't that a fair? Is that fair value? I can't see, but it came down so far, and then it. Okay, I guess what I'm wondering. So since it went up, it took out the high, it retraced into the fair value gap,
Okay,
and when
when you
it came
saying when
back
it come
up,
here and take out that high, that's what you talking
yeah,
about. Okay, we went up,
yeah,
took it, then we retraced back down to the fair value gap, and then we
right,
came back up, right? Stopped at the rejection block, and then came back down to the order
yeah.
block, and then we just consolidated out.
Okay, so okay, I guess I was thinking so since we didn't take out the high, wouldn't it be that we would be coming back to take out the low?
Uh, no, cause again, what's the most important thing about the ICT concepts? All
Hmm.
right, what's time? Okay, and right here, right, well, actually, right there, right, this right here is the New York close. That's the New York close right there, right? So that's when we close that New York. So, right, when we come over here, right, when we think about it like this right here, so we're here, right, then we're there, and when we get up there, right, when we get up here, what do we trade above over here, right? What is this over here? This is a what? This
Anticipatory,
no, I'm just saying, but just don't
oh,
overthink it.
the
What is
high.
that's a high, right? When on a right, all right. So on this move here, right? Let's get back to Tuesday, right? Let's find Tuesday, right? Let's come over here to right here. Okay. So this the full day on Tuesday, right? So on Tuesday there, right? We open up, right? We're just gonna say accumulation, manipulation, and what do we do when we get above the high? What's the last one? You have A, M,
D.
D, right? So what do we do above the high, right? What are we doing above a high? When we get up here, we're doing what, right? What's the D?
Distribution.
And when you distribute above highs, right, what happens? The market does what? Pulls back, right? So,
Right.
right, so at the end of the day, right, at the end of the day during our trend day to the upside, right,
Hmm.
at 3 o'clock, we push up above the highs, and then we distribute above those highs, and then the market pulls back and then closes at or near the high. So on a power of 3 day, right, you have you accumulate, right, at or near the open, right, you manipulate below the open, right, and then you go up and distribute above an old high, and then you close at or near the high, right?
Right.
So price on this Tuesday, right? The price on this Tuesday, right? We accumulated, right, at or near the open, right? We manipulated below the open. We went up, and then we distributed above a high, and then we closed, right, at off of the high. You know what I'm saying? So now that right there completed that day. Okay, so that day is
Okay.
complete. Right now, let's look at it. That's from just no PD raise. That's just price delivery, order flow, looking at
Right.
what price has done. Okay, so now let's go back into that same little area there. I done deleted everything, but we know what we're talking about right here in this area
Mm-hmm.
here. Right, so we're going to, let's mark out that low right there, because you said we went up here, took out that high, came back, and then we didn't take out that high right there. Okay, so we're gonna mark out,
Right.
that high right there. Then we're gonna also mark this high, because that's the first high that we took out before we traded back into. Now that we put that there. Now that we did that, now let's go up, right, in our time frames. Okay, wait, let me go back to 1 minute time frame, so we'll know exactly where we at. So when we pulled back here. These are 1 minute counters. We're going up to 15 minutes. So this right here is the start of the 4 o'clock candle. So this is when we closed, and all of this right here was after hours once we started. Well, not after hours, but like after that.
After the
And
bell.
yeah, after the bell, and then this is the end of that 4:15 candle. That's that one. That's everything we did inside that one candle right there. Right. So on that one candle there, it's 4 o'clock. Right. So on that one candle there, right, we opened, came down some. Right. We went up. Right. And then eventually we closed right there off the high. So it was just like a power of 3 candle, right? We did a big dip down in there, but we opened, went down, made a high, and eventually closed off the high. So we had an open, low, high, close candle for that 15-minute time frame, right? And then if we go up to our 15-minute time frame, there's that big green candle right there. I mean, we said open, low, high, and close off of the high, right? So when we look at now, we're looking at it from a PD array standpoint right now, right? This move right here, right? When you was like, well, we did this, we did that, right? The only thing we did on there was come back to a discount PD array here to trade back up above that high right there. You see what I'm saying?
Yeah.
So we went up,
Okay.
right? We went up, we traded back down into that 15-minute fair value gap right there, right? And then went up above that high right there. And then now we came back down into this range. This is after that 415 candle we was looking at, came back into that range, consolidated out, and now we've started back up and we've taken out that high again. See what I'm saying? So we went to external liquidity, internal liquidity, right? External liquidity, internal liquidity. Now we went back to external liquidity, and now we're pulling back into the range right now.
Yeah, and see, looking at this, I would have thought that like instead of I would have thought that since we took out that high with the 4 o'clock candle and we came back down, that we would be going to take out a low, like short. Instead, we opened to this evening and went back up and took it out again.
You're not looking for us to take out a low after this, and like right here on the 15 minute, right? On the 15 minute, we're just ranging, right? But sub 15 minute, right? We've come up, we've come to a higher time frame, anticipatory reactionary point, right? And we've gone back up, right? And taken out another high. So now we're looking for price to come back to an internal point. You see what I'm saying? We're looking for price to come back to some internal liquidity to go back up and take out that high, just what it did, right? So let's see if we can map this out a little bit
Okay.
and see if we can, okay, so we're coming here, price went up, right? Came back down to the fair value gap, went back up, took the high, came back down to something, right? And then we went back up and took out the high. And now we're coming back in, right? So now let's go to a 1 minute and put this on the highs and the lows of those moves, right? That's that point. That's that point. That's that point. That's that point. And that's that point, right? So now See, we came here, right? We traded up. We pulled back into the range, right? We came. This is the higher time frame. That's the higher time frame
Yeah.
PD array, right? But on the lower time frame, right? On the lower time frame, right? We come up. We go up, right? We come down. Take out the sell side, right? No raid, no trade. Take out the sell side, right? Go back up, take out the buy side, trade back to the internal range, that bullish order block right there, right? Because let me move some of this stuff out the way so you can see it good. Brush, move brush, right? Open this up, right? So, right? And this is just one 15-minute candle when we did this right here. But now when we come back over there, right? When we come back over here, right? We got to move up, right? And then we got to move back down into the order block, right? And we consolidate and right there at the order block. And then now when we open up, we gap up and then we expand up, taking out the high. You see what I'm saying? So it's like, it's all still content. Remember what I always say, the algorithm don't care nothing about our man-made halts. The algorithm don't care to say we gonna stop from 5 to 6. It don't care about that. It just knows that, okay, I traded down to this 15-minute fair value gap. I took out this high. Now I'm trading back down to this 1-minute order block, and I'm going to take out that high. You see what I'm saying? But in the midst of that,
it's gonna take out that high because it didn't take it out before, like, because that. Which candle is, hold on, I'm trying to look at two screens at the same time. So since the 414 candle didn't take out the high.
yes,
That candle. So
yes.
since that didn't take out the high, we know that we're going to go internal and come back up until the high is taken.
Okay, so since that didn't take out the high, right, what do we have up here? Right. We got relative equal highs up there, right? And down here, we got a single low down there, right? We got a single low down there where on, and this single low right here, remember, that single low was our retracement back down into our bullish fair value gap.
Okay.
You see what I'm saying? So we traded back down into our 15-minute fair value gap, and then we expanded away, right? So in the sense of the 15-minute, right, all we did was have a consolidation, expansion, retracement, right? So on the 15-minute, we are consolidate, expand, retrace, right? So now we're looking for deliver. That's our deliver. When we got above that high, we distribute longs in price, pull back into the range. Remember I say once we distribute above the high, it pulls back into the range. You see what I'm saying?
And so when it pulled back into the range, it pulled back in, so that'll be a retracement. Now, because we took out the high, so now it's coming back in the range. And we won't know that it's a reversal until it takes out that low under the fair value gap.
Yes, you're not looking for a reversal till they come all the way down here. Now, the only thing you're looking for, not like this move is done. That move is finished. Yeah. Boom, it's finished now.
Yeah,
that's the end. It's finished now. So now we're looking at PD arrays. Now we got a new day opening gap here. Right, we got a new day opening gap there that we just traded back down into. So we're looking for, if we're bullish coming from our new day opening gap here, right? We're looking for this. Okay, we're anticipating this to act as support, right? We're looking to see if this acts as support, because this is our new high up here, right? This is still our low, right? So we're looking to see, okay, do we act as support and keep going up, or do we come and get below this and come take out this low before coming back? Because when price is trading around the new day opening gap, we're looking for this to act as a magnet, right? If we get above it and come back to it, right, we're looking to see, do we use it as support and go up and come back to it, or do we get below it, go to the sell side and come back to it? We're looking at that to be a magnet on price heading towards some liquidity until we start to expand away from it and start running away from it. As long as we're sticking around it, we're looking for it to go to some liquidity, go back to that new day opening gap, go to some liquidity, go back to that new day opening gap, right? But as far as this move right here, that move is done. Consolidation, expansion, consolidation, expansion, retrace, and deliver. That's it. It's finished once we went above that high.
Okay, and so because I be confusing myself. Because see now, like, and I understand that, and now we took out the high, we're retracing, and like if you look at it on the minute chart, we retrace on that retracement. We had fair value gaps and everything. We came all the way down
Don't
to
worry about that.
retrace.
Don't worry about that. The only thing you worry about, right? That's why you get your higher time frame anticipatory reactionary points. If you haven't
Okay.
traded into a higher time frame and it don't matter if it's a right, it don't matter if like you don't want to look at every like you don't want to look at this fair value gap and be expecting something. You don't look and why I don't want to look at that fair value gap and be expecting something because that's a bullish fair value gap up in the premium, right? If price wants to do something off this, it's got to do it without me and let me do something else because if I'm buying, I want to buy in a discount, right? I don't want to buy in the premium. This is a bullish fair value gap in the premium. So I'm not looking for that to give me anything. You see what I'm saying? If I was only looking at this piece of price here, right? I'm looking below for something below there. This is like right at equilibrium. I don't want equilibrium. I want discount. You see what I'm saying?
Okay.
So I'm looking for something to have. And what's below this equilibrium for this range? The new week opening gap, right? So I'm looking for a reaction off of a discount PD rate. You see what I'm saying? So just looking at this piece of price right here, this is the only piece. I'm just gonna highlight this price range here, right? I'm gonna highlight this. This is all the. I'm gonna make this. Orange, right? This is all the price that's happened since the 6 o'clock open, right? And this right here is our new day opening gap, right? And I'm gonna go down to a 1 minute chart, right? So looking at a 1 minute chart, right? This is the only 15-minute PD array that I got on my chart, right? So I'm not looking at any of this over here unless I want to trade against the grain. You see what I'm saying? Unless I want, and looking at the 1 minute chart, right, this didn't give me a setup to trade back to this because once we took out this high and when we came down, right, when we came down here, we just blasted down, right? This little retrace back up, that wasn't enough for me to want to get short and come to the new day opening gap. You see what I'm saying?
So when that short right there went, because it turned, so that short, I would have taken that short. Because we came down under the low.
That's fine. I mean, that's fine to take this short. It's fine to take this short, but you got to remember, this is the new day opening gap, so that's your target. You see what I'm saying? This is your primary target.
It's in the discount and the support. Okay, I see. And so since it turned and changed, had the state of delivery, then we know.
Yes. And you got to remember now the higher time frame is bullish. Right, so if you're shorting in a higher time frame, you only want to go for your primary target. You don't want to be trying to get all the way to sell side. You don't want to be trying to get all the way down here, right? You want to look at your primary target, right? And we came to the primary target, and that's so from here to there. That's not a good risk to reward for me. You see what I'm saying? That's why I'm saying I wouldn't have taken that to go back to this right here. You see what I'm saying?
I would have thought it was gonna go all the way down and take out the low.
Because you're not thinking about the primary target. You got to remember and see this right here is your higher time frame anticipatory reactionary point. So when you trade into that on a 1 minute, you're anticipating price to do something. You see what I'm saying? Right. So once you get here, if your new day opening gap was down here, then you can be like, okay, I'm a short here and try to get that low aiming for the new day. But since it's up here, you don't want to shoot past your higher time frame. That's the purpose of getting your higher time frame target. Because when the lower time frame get there, you're looking to get out or scale or be looking for an entry to go the other way.
Yeah. Okay. I see you on mistake. Okay.
You always
And then
want to
that
have
is
your,
during the macro, and
yeah.
it turned. Okay.
And that's why that's why you do your analysis from top down, right? You don't go from down
Yeah.
up, right? You go from top down. And then see, that's why people be scared to look at the lower time frames, because they in there looking for, okay, I got a break in market structure, I got a fair value gap, I got a breaker, it don't mean nothing if you ain't came to a higher time frame PD array. You see what I'm saying? If you
Yeah.
ain't come to a higher time frame PD array, don't even be looking for no. Y'all see, I don't start looking for anything on the 1 minute until we trade into our higher time frame anticipatory
Yeah.
reactionary points. That's when
That
you go to the
patience.
1 minute and look for the PD arrays. Right. And I always say it's cool if you want to enter, like when it come back down to here, it's cool if you just want to enter right there. That's just not how I
Yeah,
trade.
that would be.
You see
Yeah.
what I'm saying? The way I trade is it came there, we traded back up here, we traded back into that fair value gap. That's when I'm getting in right there. You see what I'm saying?
Yeah.
We got a
Patience.
change in the state of
Yeah.
delivery here, right? We got a fair value gap there, right? So there you go. That's what I'm getting in there. I got a change in state of delivery. I
Mm-hmm.
got a fair value gap. I got an inversion fair value gap. So that's when I'm getting along right there, right? If it want to come
Okay.
up here and fiddle faddle around or whatever, sometimes that's just the nature of the beast. But that's when I'm coming, because why? Right? We was doing our thing. We came back above the high, right? We traded back to internal liquidity, right? Took out this trend line liquidity right here, right? And then now we displaced back up, traded there. That'll be the entry, looking to go back up and attack that high, maybe hit that rejection block. I don't, what I'm saying? Sometimes Asian don't give you big range, and then you got to know the market you're trading. Right? You got to know the market you're trading,
Yeah.
because, what I'm saying, that may be a point to scale some, right? When you get back up here to this mitigation block, that may be where you
Mm-hmm.
want to get out at, right? Because we're coming back to, right? We're coming back to a mitigation block right there. We're coming back to a volume imbalance right there, right? We're coming back to a bearish order block. You see what I'm saying? We're coming back
Yeah.
to PD arrays there, and now we're starting to consolidate right there. So that,
That's what it
and you got to
is.
know the
Okay.
nature of the session you trade. And so, and coming from here, right, coming from the entry on the fair value gap, and let's just say you go up to the bearish order block, that's like 9.25
Mm-hmm.
points. You know what I'm saying? And that may be a good range for the
Mm-hmm.
Asian. You see what I'm
For
saying?
Asia, yeah.
Yeah, and then it may be one of the things. Well, we done had high resistance all day, so now we come up, we go down, right? We come back up, we trade down, then we go. You know what I'm saying? Because it's like we went up, we
Mm-hmm.
consolidated a little bit. Now we consolidated a little bit, right? We may consolidate a little bit. We might, you know what I'm saying? You never know, but you got to know the time you're looking at. But when it comes to looking for a break in market structures, this is not the time. Your entry time frame is not the time frame you're looking for that on. Remember,
Yeah.
we got a narrative time frame, we got a structure time frame, and we got an entry time frame. Right? Your narrative time frame is your higher time frame. That can be your daily, that can be your 4 hour, that can be your weekly, whatever it is. If it's your weekly, then your narrative gonna be your 4 hour, and then your entry gonna be your 15 minute. If it's your daily, your structure gonna be your 4 hour, your entry gonna be your 15 minute. If it's your daily, then your structure gonna be your 1 hour, and your entry gonna be your 5 minute. If it's your 4 hour, then your structure gonna be your 15 minute, and your entry gonna be your 1 minute. You know what I'm saying? And what I mean by that is okay, if your 4 hour is
Mm-hmm.
bullish, right? Your 4 hour is bullish, right?
Right.
So then, okay, 4 hour, we're gonna say bullish, right? I can't write no
Mm-hmm.
more, right? So then on the 15 minute, right? So on the 15 minute, you're looking for some type of bullish change in the state of delivery, right? You're looking for some type of bullish
Mm-hmm.
change in the state of delivery. And then on your entry time frame, that's when you're looking for a liquidity run, right? And then some type of entry, whatever your entry PD array is. You see what I'm saying?
Okay.
You look, so like just say if we was looking at this right here, just say 4 hours bullish, this was our
Mm-hmm.
15 minute fair value gap, right? So then when we come up here, right, and we sweep down, that's our liquidity run on the 1 minute, right? There's our displacement. There's our entry right there. Just in the sense of 4
Mhm.
hour, 15 minute, 1 minute. You see what I'm saying?
Yeah.
That's what, when you come to this time frame, you're looking for, and you see where it's happening at? It's happening at our anticipatory reactionary point. We came down, swept
Right.
liquidity at the 15 minute, and like I'm saying, we ain't saying that this is right for
Mhm.
anybody that's watching this, but at the
Right, but
15
yeah.
minute, right, we're coming into that higher time frame anticipatory reactionary point, and now that we're on the 1 minute, we see we ran liquidity, we displaced away. Now we're looking for the fair value gap. Now we're looking for the breaker. Now we're looking for the opportunity to
Mhm.
trade into it and go. We're not just coming here and saying, oh, we got a bearish break in market structure, I'm trying to sell. No, this is our entry time frame. We want our bullish change of state delivery, enter bullishly. You know what I'm saying?
Okay.
Or if we know we're bullish, right, then we can say, okay, I'm going to sell back to my anticipatory reactionary point.
Right. Okay, that makes sense. I have to have more patience too.
Yes, we all have to have more patience.
Okay, thank you, Tim.
You're welcome. Now everybody else scared to say something because E-Rock been asking questions. They like, man, I ain't gonna say nothing. Tim gonna tell me I can't act. What's up, man? Y'all got something? Venus, why did you retract your statement? Y'all, what did Venus say? Venus retracted their statement. What did Venus say, y'all? I just looked over there and say Venus retracted their statement. Look here, man. I'm sorry, y'all. I told y'all we weren't gonna be here long. Y'all throw the tomatoes at E-Rock.
Yeah, my
E-Rock,
bad, y'all.
E-Rock the
I'm
one.
hungry. I'm hungry. I'm supposed to be eating.
E-Rock in his stomach growling, asking questions.
For
Rhonda,
real, for real.
I seen you jump in the chat, Rhonda. You got something? I saw you pull up in the Discord. You gonna ask something? Hey, y'all, what did Venus say? It say Venus retracted their statement. What did Venus say? What's up, Aldo Giant? Rhonda, you ain't got nothing. You just pulled up just to hang out.
I just pulled up because my Discord automatically opened when I turned on my computer.
Oh, okay then.
Hey, y'all.
The Discord, I don't charge for the Discord. The Discord is for the people that pay for the monthly YouTube membership. That's what the Discord is for. I don't charge for the Discord, but since people support the channel financially, right? That's my way of giving them more of my time. So if they gotta answer, that's my way of quote unquote mentoring people, because I know watching pre-recorded videos, people may not be able to have the question at that time. So we have, like, you know what I'm saying, 2 and 3 Q&As a month, so that if you got questions, you can always pull up and ask. I do pop-ups all the time. If you got questions, you can ask. But that's just my way of saying thank you for supporting the channel. So we got the mentorship is $24.99, right? If you sign up for the mentorship, I advise you to go back, watch the artery and price action videos, so that when we do Wednesday night homework reviews, you can ask all your homework questions on Wednesday nights, right? Wednesday nights is dedicated to homework review for the mentees, right? It's 19 videos in the artery and price action, right? The Black Spiders is $7.99 a month. Black Spiders, they pretty much get everything except for the mentorship Wednesday night price section. They get 2 Q&As per month, and they get all the pop-ups. The gold members is like $4.99 a month. They get 1 Q&A a month, and they get 1 Q&A a month. And then the silver members is $2.99 a month, and that's just because you like what I do. The silver don't get much outside of what the public YouTube get. That's just because you like what I do, and I appreciate you. You were explaining something which I picked up from 22 mentorship. It's been tough for me, but I'm straight. But I'm starting to get the hang of it. What was it, Venus? What was I saying that you struggling with? And I appreciate that you agree with what I said. Go and don't just agree with it. Go back and look at. I know it's a long video, man, but go back and look at it, because I think we dropped some good we dropped some good information in this video. So take the time to dissect. Don't try to look at it all at one time. Break it down in little pieces. Take notes. You know what I'm saying? Give yourself little notes and make little time stamps and be like, hey, look, I want to go back and look at this piece at this time, yada, yada, yada. You know what I'm saying? But what exactly was I saying that you still struggling with the 2022 mentorship that Michael was teaching? Is this the time when I wish I was still using StreamYard where I could put a link up there for Venus to pull up? You said a lot, but my biggest issue is consistency. Definitely need to work on that. Okay, Sam B, if your issue is consistency, right? First of all, well, two things. Either you're switching what you're doing, right? Or you're changing your risk, right? If you're switching what you're doing, don't switch what you're doing, meaning, right? Start off with one model that you trade. I only do this, right? It can be a time-based model. I only trade during this time. It can be a PD array. I only use this PD array. It can be I need to see a break in market structure and a retracement back to a breaker, break in market structure, retracement back to a fair value gap. Whatever your model is, follow the same rules every time you enter, right? And then don't change your risk. Don't risk $200 on one trade, right? And then it stop you out, and then you risk $200 on another trade, and then when you make $50, you close the trade. You know what I'm saying? You still down 150. You know what I'm saying? Don't, you know what I'm saying? Manage your risk very strictly and make your losers smaller than your winners. So if on average, on your average losing, if your average losing trade is $200, right? You want your average winning trade to be at least $300, 400 or better, but at least 300. That way your average winner is bigger than your average loser. You see what I'm saying? And then don't lose some money and then get scared and then be choking your trade and trying to get out the trade quick because you see some green, right? That's and letting your red run against you and moving your stop. Oh, it's gonna go in my way. It's gonna go in my way. All of those are like bad habits. So figure out about your trade and what it is that you're doing. Right, I can go full screen right now because I ain't looking at the chart. Figure out what it is that you're doing in your trade and that's making that inconsistency. Are you hesitating when to take the trade? Are you switching times when you're trading? Are you trading more than one model? Are you trying to do the next best thing? Are you trading the silver bullet today, unicorn tomorrow? Trying to find market maker models today, looking for breakers tomorrow, fair value. You know what I'm saying? If you jumping all over the place, narrow it down to one thing and keep your losers smaller than your winners. Picking the wrong fair value gap when liquidity was taken out and whatever side, hope that makes sense. Okay, picking the wrong fair value gap when liquidity is taken out on whatever. Okay, so when you're looking at picking the right fair value gap, right? I hit the wrong button. When you're looking at picking the right fair value gap, right? The hip pocket, training version of it is, right? The primary rule is you wanna let me type this out. Right, this is the primary rule when it comes to picking any PD array, right? Buy in a discount and sell in a premium, right? Buying a discount and selling a premium, right? That's the number one rule. That's the quick down and dirty rule for anything. Right? Buying a premium, selling a discount. Okay. Now, once you understand buying a premium, selling a discount, you don't want to just willy-nilly buying a premium and willy-nilly selling the discount, right? You want to understand where the market is headed and where is it most likely to draw to. Okay, so we're gonna cherry pick a nice clean little place to look at. Okay. Oh. Let's pick this right here. This is a good one right here. Oh, this is a good one right here. Right? Now, looking at this right here, okay. Let me ask y'all a question. And gang, feel free to chime in too. Is this bullish fair value gap right here? Right? Is that bullish fair value gap right there? Is that in the discount or the premium? Right? YouTube Venus. Yeah, YouTube Venus, is that in the that bullish fair value gap right there, is that in the discount or the premium? Right? We're just looking at this price, this section of price right there. Right? Here to learn and share said premium. Right? We got one person stepping up, one person said premium. Who in the Discord? Mad K say premium. Who in the Discord scored? E-Rock, Lump, Rhonda, the G is silent. What y'all say? Deborah said premium. Sam B. Sam B. Sam B. Sam B.
Isn't that the discount?
It's in the discount. It's in the discount.
Okay.
Right? Why is it in the discount?
Yeah.
Right now, I don't know where E-Rock went to auto-tune somewhere. Right? What is this right here?
Okay. Yeah.
What is that right there?
The
It's the discount 80 everybody balanced price range. Yeah, E-Rock, I don't know what kind you on a Samsung 0.5 or either an iPhone 1 or a Samsung 0 cuz you sound like bang, 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 bang. All right, so this right here is a balanced price range, right? What's a balanced price range? When price has offered buy side delivery, sell side delivery, and has left that area, right? So when price leaves that area, that's letting you know that this is efficiently covered, right? We have buy side delivery, sell side delivery, and then we leave the area, right? So we're not looking at this low to this high, right? This low is down here inside the balanced price range. When price left this area here, it's letting us know that, hey, I'm done with that area for now until I go do something. So now that we know that this is a balanced price range, let's put B, P, R right there. Now, I'm sorry, R, come back here. Now we know we need to be looking from that low to that high for our range to be looking for an entry. Why? Because we got our consolidation, we got our expansion, and now we're looking for a retracement into a discount PD array, right? So now we're looking for a reason to buy in the discount, right? Where's the discount? From that low to that high, because this is a balanced price range, and this move out of that balanced price, out of this area where we got buy side and sell side delivery, that move let us know that this is a balanced price range and price doesn't want to go back there. So now this is our range we're watching. This is the discount of that range. So we're looking for a fair value gap down here to get long off of. And that's how you pick the correct fair value gap for going long. Looking for the fair value gap in the discount of the move. If you have multiple fair value gaps in the move, you want to look at, right, the one that makes the most sense of retracing back to, but allow for price to come back to any ones that's below it. Right? Any ones that's below it. So if you got multiple, you just like, if we look over here, right? If you look over here, we have, We have multiple fair value gaps here. We got a fair value gap here, right? We got a fair value gap here. If I can get it right. Right? Got a fair value gap there. We got a fair value gap here. Right? We got multiple fair value gaps, right? So when we looking at it, right, we're looking and saying, hey, right, we've got buy side, we've got buy, come here. God dog it. Right. Okay, that's good enough. Right? We got buy side, we got sell side, and we left that area, right? I don't want to see price come back down here right now. So we're looking at that fair value gap, right? We got a mitigation block right here, right? We got a mitigation block here. We got an order block there. So we're looking for price to stop around this area. So you're looking for this fair value gap, right? But we got to allow for price if it wants to come back down to these imbalances here. We got to account for that stuff. You see what I'm saying? So that's how you pick the right PD array buy. Figuring out what range that price is in, what's your dealing range, what's your price leg, right? If you want to buy, you're looking for a fair value gap in the discount. If you want to sell, you look for a fair value gap in the premium. Right? And then if we've got like a balanced price range that you've left, you want to look from a low, leaving that, like this is when we left that balanced price range. So you want to be looking from when you leave the price range up to the high for the discount in the premium. Hope that makes sense. Deborah said, oh, this good. Major aha. Y'all give it up for 80, man. 80 said they had a major aha moment looking at this right here. 80, go back and study it. Don't take my word don't take it from me. Be like the Bereans. Go back and search to see if those things that I say is true. I want you to be more noble than those in Thessalonica. Be like the Bereans and search these charts to see if the things that I say are true. Go back and look through price. You hear me? My ears are sweating. What else y'all got? I'm on a roll now, man. I'm on a roll now. Is this the last example? You do not have an opposing candle color for the pullback. In the what you mean? What you mean opposing candle color? I don't know what you mean. What you mean opposing candle color? I'm lost. I'm lost on that. Help me out. Say it with your right hand, Hit Learning Show. Say it with your right hand. I can't understand what you said right now. There was not a red candle in the pullback of the BP. That was like the whole. I was looking at the whole. You couldn't see. Like this was the whole range we was looking at here, right? And then when I had blew the chart up like this right here, when I blew the chart up and pulled it over, right? I was just looking at the corner of it over there. I wasn't looking at like the whole. We was already talking about that range, right? That was the range with the buy side and sell side delivery, right? It just was off to the side over there. We couldn't see the whole thing, right? If that's what you talk about over there. The next range above that. Talk about right here. Right there. We went up, we went down. Buy side, sell side. Right? We had buy side delivery, sell side delivery, left that area. Right? See here, we got buy side, sell side, buy side, sell side, buy side, sell side, left that area. Right? Buy side delivery, sell side delivery, left that area. Right? It don't got to be a lot. Just like if you got overlapping, like if you got a Sibby and a Bissy, right? It's just two fair value. It's just two candles next to each other, right? And you still have that balanced price range. You know what I'm saying? You know how we had a balanced price range in between like a Sibby and a Bissy? If we can find one, right? this is like inside some consolidation, but just in between this SIBI and this BISI right there, right? That's a balanced price range right there. Right. Right, if we look at that right up, just between those two, this is inside consolidation, but like you got a SIBI and a BISI right there, right? So in between a SIBI and a BISI, that's a balanced price range. This ain't no good example of showing it, but that's what it'll look like. You see what I'm saying? And even if you just had two candles side by side like this right here, they got buy side delivery, sell side delivery, right? Long as it's buy side and sell side delivery, and then you leave in that range, you know what I'm saying? It's efficiently delivered. That's what a balanced price range is, a range of price where it's efficiently delivered. How can you join your Discord? Do you have a link? The Discord is for anybody that's a channel member. I don't charge for the Discord. As long as you're paying the monthly channel membership subscriptions, you will be a part of the Discord. The Discord is free for those who support the channel, right? And again, it ain't one of them Discords where we just be in there every day teaching and try, but we got like I'll show you what we got in there. But if you go to any one of my videos, right, you will see a join button up under there on my channel. You see a join button there, right? And you got I'm gonna tell you, silver for the $2.99. That's just cause you want to buy me a cup of coffee. It ain't much perks to silver, right? Spider Gang Gold, you get one Q&A a month, and you get any of the pop-ups that I do in the I Stay Popped Up channel. Black Spiders, right? $7.99 a month. That's $0.99, $4.99, $7.99. You get 2 Q&As per month and any of the pop-ups that I do and I Stay Popped Up. The mentorship, that's $24.99 a month. That's for the artery and price action series that I did. I recommend you going back, looking at those 19 videos and doing the homework. With that, you get 3 Q&As a month on Sunday, and every Wednesday night we do homework review, and that's from the artery and price action series, them 19 videos where I answer any question you got about homework. And long as you paying the monthly subscription through YouTube, I ain't got nothing to do with that. That's on you. As long as you want to pay it, then you will be a part of the gang inside the Discord over here, right? Like I say, we don't do a whole lot of chart talking in there, but when you come in here, in the main, well, if you join it, you got to make sure you click once you accept the link. That'll be inside the when you join the membership. If you go to your membership tab, you'll see a post right here that tells you that when you read more, you click that link to accept it, and when you come into the Discord, make sure you click that 80, right? It's 80 right now. Make it turn to 81. Then if your YouTube name is not the same as your Discord name, you need to tell me that. Hey, Tim, right? Hey, Tim, I'm such and such on YouTube, right? And then I'll put you in your tier. When you get into your tier, you will be able to see which tier you are down here. These are the membership tiers, right? You see, we got the PA Mentee voice, Black Spider voice, right? And then we got some other channels. I don't really post a lot in these tier channels. I just go into the voice because I'm always popping up, right? And this is the study hall, right? These are all my YouTube videos I recommend you go back and look at, right? These are the mentorship videos from the artery and price section. We got ICT core content videos. I recommend if you want to learn the ICT concepts, these are all his core content videos from month 1 through month 12, right? We got the 2022 mentorship in there. We got the bridge building video. That was a dope video. We got some DR stuff from Robinson. He's one of the members. He be talking DR stuff. There's a bunch of rabbit hole stuff if you want to get deep in the rabbit hole with price action stuff. I don't be in there a lot no more because it make my brain hurt. And on my YouTube playlist, if you want to know ICT concepts from the way I do it, I got the ICT lingo playlist. I got the part 1, 2, and 3. I got Tim's Tidbits, How to Trade Futures. I got Learning Future series, right? These are all my like educational type videos. But all of these videos that's in here, nothing in here, you can get all of this for free. If you just go to my YouTube channel, you can look at all of this right here without ever joining the YouTube channel membership. All of this is on my YouTube channel for free. And then whenever I'm on a live video, you can say, hey, I got a question, and I'll just run my mouth. But if you want that extra, you know what I'm saying? Like when I go to I Stay Popped Up, see, I got a channel over here called I Stay Popped Up right there. Now I don't want to leave there, but I Stay Popped Up channel. If you look in there, you know what I'm saying? You see, we got all kind of stuff that be in there because I stay popped up. You know what I'm saying? We always in there. I stay popped up. Right, this is one of the Q&A channels for the third Sundays, right? And then we got the PA, the mentee voice, right? We got the mentee voice. Then we be like, we read. Oh yeah, with the mentees, we also do live tape reading on Mondays, right? This is from our last tape reading session. We do live tape reading on Mondays also with the mentees. But again, that's how you get into the Discord, by joining the YouTube channel membership. Let me see. Then there's the enigma level. Yes, sir. That's $999 a month, not $99.99. That's $900. It's the enigma level tier with the daily signals for every session, even macros for the low price of $999 a month. Them just jokes. Ain't no enigma level tier. I think that's it. Man. I think that's all I got. Anybody got anything else? We at 2 hours. E-Rock, it's your fault. We at 2 hours, E-Rock. When we got on here at 6, we said we ain't gonna be before you long. Y'all break it down in chunks. Hey, y'all ask Rhonda to come back in and start doing the what's names again, so y'all know exactly where to go in the video.
I'm so far behind. I gotta watch them myself, but when I do, I will.
Hey Tim, what you said? What I said? I saw something. Hey Tim, do you use both NinjaTrader? I use NinjaTrader for my trading. I trade if I'm on my phone. I will take a trade from TradingView. But I prefer trading on NinjaTrader. And I use NinjaTrader for trading because my broker TradeStation, their margins is higher. Like just to trade one micro, it's like $600 and some margin to trade one micro intraday for the NQ, and I think it's like $2,400 to trade one mini margin. And but on NinjaTrader, it's $100 for micro margin and $1,000 for a mini margin requirement. So that's why I use NinjaTrader. And plus I learned how to trade on NinjaTrader, and I like the bracketing on NinjaTrader. I like how fluid it is to like get in and out of the trades using like the stops and stuff like that. I just like trading. I like charting on TradingView better than NinjaTrader, but that's why I chart on TradingView and I trade on NinjaTrader. Like on my NinjaTrader chart, I don't have any lines, any nothing. Only line that be on my chart is my entry and enter, my entry and exit buttons. Lines on NinjaTrader. And like on my NinjaTrader chart, it looks just like this right here. It's just naked, except for it's got a black background. You know, it'd be naked. And then all my markups I have it. I don't know if you ever seen it before when well, you probably didn't because you ain't never seen when I be tape reading, but it'll look like I have like all my markups on here like that, and I have my window will be like this, and then I'll have like a NinjaTrader window right there. And when it come down into my fair value gap on the higher time frame, then I start watching the lower time frame over here, and then I'll just right click buy limit, right click sell limit, and when it hit my price, it just put me in. You can connect Tradeovate. I know you can connect Tradeovate, and NinjaTrader bought Tradeovate, so I'm gonna say yeah. Right, if I go to, but you got to have the TradingView package, right? You got to pay for the TradingView package in order to connect it, right? So if you don't have the TradingView package, then you won't be able to connect Tradeovate to TradingView, right? But if you go, because if you go into Tradeovate, you can buy, like, it's called the TradingView something trade. You can buy, like, but I just like trading on NinjaTrader, so I don't even bother trying to connect my NinjaTrader to TradingView. Yes. Yeah, the chart and kill me on NinjaTrader. Oh, I wasn't showing my screen? Okay. My bad. But I just had it like that. I just have my screen over here, and I right click over here in a NinjaTrader screen. Like, just say it'll be like just say I have like NinjaTrader right there, and I have TradingView right there. And when it come to, right, like, just say my what's name right there. Uh-oh. Right, just say I'm looking at, like, my charts like this. Just say these the same charts, and then when it come down to here, then I watch over here, and I just right click and hit buy limit 1, and then, you know. Uh-oh. God dog it. I did not mean to close that. See what y'all made me do? I'm gonna close down my NinjaTrader. I made my TradingView. All right. I mean, if you want to chart on TradingView, then you're gonna have to buy the data. But if you want, and it, if the only reason why I got data on TradingView is because the gang like how the TradingView charts look, and I say, hey, long as anybody, you know what I'm saying, joint up to the subscription, I keep paying for the data, right? But as soon as ain't nobody paying for the memberships, then I ain't gonna be paying for the data. Like, cause it's like the plan I got is like $100 and some a year, I think, and then the data is like it's either $7 or $12 a month. I can't remember. I think it's $7 a month. But anyway, you know what I'm saying. So I like long as people paying for the channel membership, then I pay that $150 some a year and that $7 a month for the data. But as soon as ain't nobody paying for it, I'm cutting it off because I don't need it. I don't need it. Yeah, I would let it go because I only trade in NinjaTrader. I don't trade, like, I will trade from TradingView in my phone, but the only thing I use TradingView for is charting. You know what I'm saying? I use it for charting. And, you know what I'm saying? I can't justify, you know what I'm saying, $150 some a year and because I'm paying $12 a month for data in NinjaTrader. You know what I'm saying? So I'm paying, you know what I'm saying, I'm paying $12 in NinjaTrader, $7 in TradingView for the same data. You know what I'm saying? You know what I'm saying? So, because I used to do everything on NinjaTrader. And then when I started using TradingView, I'm like, man, this charting is like so much easier. You know what I'm saying? Like in my NinjaTrader, I got all kind of templates and stuff in my NinjaTrader too. I got templates that I had set up, but the charting is just easier in TradingView. All right, man, we talked about everything under the sun. We didn't talk about price no more. I'm about to get out of here, man. I appreciate y'all for hanging out with me, man. Hopefully y'all learned something from this. I appreciate the non-gang members for pulling up. Gang. You know Y'all know what it is. I appreciate y'all. You welcome 80. 80, you official gang member too. You know what I'm saying? You ain't in the channel membership, but you be pulling up on the regular. Right? You official gang too. Look here, man. We ain't did this in a while, but remember, take advantage of the day, man. Take advantage of the day while you got the opportunity. Tell your loved ones that you love them. Don't just say it. Don't just show it. Say it, show it, and confirm it. How do you confirm it? You figure out their love language, and you express to them what your love language is. If your love language is physical touch, let them know that so that they don't be out there trying to buy you gifts, right? They don't be trying to give you words of affirmation. If their love language is words of affirmation, don't be trying to buy them a Prada bag or Gucci shades or, don't be trying to, they don't need no gifts. They want words of affirmation. Open up the lines of communication so you know how to express your love in a way that they can receive it. Do me a favor. Go in the next room, hug your spouse. It can be your husband. It can be your wife. Hug your kids. Tell them that you love them. If your parents are still here, if you're blessed enough for your parents to still be here, call up your mama. Call your dad and say, hey, mama, hey, dad, I love you. If your mama's still here, go by your mama house, see her. Go wash her car, go take her trash out, go take her out to lunch. Me and my mama went to Jersey Mike's today, sat down, had us a nice lunch today at Jersey Mike's. Still blessed to have her in my life. Take advantage of today, man, while you still can. I appreciate y'all, man. Until the next time I decide to get on Al Gore's internet, which will be Thursday at 6 p.m. Cause tomorrow night at 7, me and the mentees got homework review. Y'all better pull up with your hard-hitting questions, man. Hey, it's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That big spot if you don't hablo español. And this has been another episode of the Intra-Day Price Action Review. Y'all be safe out here in these trading streets, man. Gone.